U.S. Tariffs on an additional $200 billion worth of Chinese goods sent Asian stocks tumbling on Wednesday, with China's markets leading the declines, as trade tensions between the world's two biggest economies continued to deteriorate. Washington decided to impose the extra tariffs after efforts to negotiate a solution to the dispute failed to reach an agreement, senior administration officials said on Tuesday. The United States had just imposed tariffs on $34 billion worth of Chinese goods on Friday, drawing immediate retaliatory duties from Beijing on U.S. imports in the first shots of a heated trade war. U.S. President Donald Trump had warned then that his country may ultimately impose tariffs on more than $500 billion worth of Chinese imports. MSCI's broadest index of Asia-Pacific shares outside Japan fell 1.5%. The index had gained for the past two sessions, having enjoyed a lull from the trade war fears that lashed global markets last week. Hong Kong's Hang Seng slid 2.2% and the Shanghai Composite Index slumped 2.4%. South Korea's Kospi lost 1.3% and Japan's Nikkei fell 1.8%. The markets still remain sensitive to the trade-related theme, which is something investors have to take into account for the long term, said Yoshinori Shijumi, global market strategist at J.P. Morgan Asset Management in Tokyo. At the same time, the trade dispute can easily be blamed for a variety of ills. But it could mask over factors that could also weigh on equities in the longer run, such as tighter monetary policies led by the United States. The yen, often sought in times of political tensions and market turmoil, gained against a number of peers. The dollar was down 0.1% at 110 yen and 88 cents, pulled back from a near two-month peak of 111.355. The euro fell 0.25% to 130 yen and 11 cents, and the Australian dollar lost 0.7% to 82 yen and 24 cents. The Aussie, considered a liquid proxy for China-related trades, fell 0.5% against the dollar to $0.7422. China's yuan lost more than 0.5% against the dollar and back towards an 11-month low plumbed last week. The 10-year Treasury note yield fell nearly 4 basis points to 2.8363%, pulling back sharply from a one-week peak of 2.875% scaled the previous day. Oil prices fell after the United States said it would consider requests from some countries to be exempted from sanctions it will put into effect in November that prevents Iran from exporting oil. Crude futures lost 1.25% to $77.92 a barrel. Oil had risen the previous day, supported by a larger-than-expected U.S. stock draw on supply concerns in Norway and Libya. Copper on the London Metal Exchange sank roughly 3% to brush $6,092.50 per ton, lowest since July 2017. Reporting by Shinichi Saoshiro, editing by Eric Meyer and Sam Holmes.